It was another great day for gold and silver prices, with silver surging to almost $48 an ounce and gold breaking yet another record. We're going to get into the reasons why gold and silver went up and why this is not the end of the bull run. Yes, indeed, we got more to go, that's for sure, and I'll explain exactly why that is. Let's talk about it as we explore. That's right. I think most analysts would agree, professional and others in the community, that we have more upside potential for gold and especially silver, I'm feeling pretty good about silver. In fact, I've never felt more positive about silver. And I'm looking beyond this rally for silver, folks. I like to look long term. Now, this channel gives you the latest news in the world of precious metals and analysis. If you enjoy what I do here, hope you will consider subscribing to the channel and pressing the thumbs up button. And really, the scope of what I talk about is usually based off of the day's movement in gold and silver prices. There's some people that don't understand that because they don't listen, but nonetheless, most of you do. But I always talk about how the long-term proposition is what we should be looking at. But I think it's good to find out what is driving the price from one day to the next, and we can celebrate or we can be upset together when the price drops dramatically. But most people also see that as an opportunity. It is split between the metals today in an unusual move. Platinum and palladium and rhodium all fell today. Gold and silver are the only metals that are up. Gold up slightly, 0.1% here, up $3.80 to $3,863.50. However, earlier in the day, we did see it go up to $3,896.30. That is $3.70 shy of $3,900. Amazing what we saw earlier in the day. Silver also spiked up dramatically earlier in the day, reaching $47.87, just 13 cents shy of $48. And I did a poll in my Sunday night broadcast where we cover the markets. This is the only channel that covers the precious metal markets, the opening of the markets in Asia. And I asked you what you thought, if you thought silver would reach $48 by the end of the week. We're midweek now, and we came within 13 cents of it. I think we're going to get there by the end of the week. Silver now is sitting at $47.26, up 57 cents, a 1.22% increase. And again, that's sort of a consolidation back, but I think it's just poised and ready to move up again. Platinum, palladium, and rhodium are down, with platinum taking the biggest hit, down over 1%. So what's behind this? Well, a lot of it is talking about the shutdown. Many news organizations are talking about that as to why we are seeing gold's price go up. In fact, the futures market almost saw $4,000 an ounce for gold as the U.S. government entered its first shutdown in almost 7 years after lawmakers failed to reach a deal on government funding. And the gold futures got closed at a record $3,897.50 per ounce, while spot gold was now what I just reported here. While the impact of government shutdowns on markets is usually minimal, the timing of this one is significant. Critical U.S. jobs data due to be published Friday will be delayed, clouding the outlook for the Federal Reserve just weeks ahead of its next meeting. President Donald Trump has also threatened to use the shutdown to cut a lot of federal employees who are ordinarily furloughed during a shutdown and brought back to work once it ends. With no clear path towards a deal, it's also unclear how long the shutdown will last. And during Donald Trump's first term in office, a 34-day partial shutdown was the longest in history. And so, therefore, of course, you're going to see this fight, and with both sides blaming each other. I'm not going to get into that debate here. But obviously, the reporting of the numbers means that there's going to be a lot more speculation. Already, the jobs numbers we did get were not good. And likely, probably, the Federal Reserve is going to still lower rates, assuming that the numbers that are going to be coming out on Friday will probably not be good either. And obviously, the government jobs that are lost will be added if these cuts do occur. Now, gold's status as a safe haven is well publicized, but the inexorable rise in gold price over the last few years has been truly astounding, with the metal hitting fresh highs daily, according to Michael Field, chief equity strategist at Morningstar. He told CNBC in an email Wednesday. And I'll tell you what, it's something that, looking at gold in a different way, if you're going to make a purchase, this is the kind of gold you might consider getting. I'm working to fill up this Summit Metals here card holder. This is a pretty cool little wallet, a business card size holder. You can put your gram size bars in here. These little Scottsdale bars are really cool ways to be able to get an amount of gold that is nice. They're larger and a little thinner than your normal 1 gram bars, but that makes it, I think, extra special when you can fill up this. You have a sense of accomplishment filling up one of these things. Summit Metals is the only company, bullion company out there that has their own precious metals holders like this. So check them out at Summit Metals and click in the link in the description below to get there. It's an affiliate, well, not an affiliate link, but it is a link that can be tracked that you're getting there from this channel. Now, he noted that the driver behind the rally today was the U.S. government shutdown. Field argued that it was just the straw that broke the camel's back. 2 major ongoing conflicts, political instability in France, newly announced tariffs, all of this are combining to create a very unstable picture for investors. And when the going gets tough, gold gets a boost. There's more things that are leading more towards gold's price moving in a northerly direction for sure. Philip Giselle, chief strategy officer at BNP Paribas Fortis, has long held the view that gold can cross the $4,000 mark, and he now believes the metal can go even higher. Gold is fast closing in on the $4,000 target that we put forward about a year and a half ago, we said. Back then, the move was solely driven by central bank buying, while investors were net sellers of the yellow metal. But since the beginning of the year, investors have come on board, which has clearly accelerated the move to the upside. He argued that amidst ongoing uncertainty and volatility, in an environment of sticky inflation across the globe, investors were broadly taking the view that they should diversify away from the classic 60-40 portfolio strategy with hard assets like gold. They're very clearly are early in the game as gold-related investments are barely 2% of the average investment portfolio worldwide. To say it in baseball terms, we are only in the second or third inning. $4,000 will not be the end point, just as the start of the strongest bull market in the precious metals the world has ever seen. So we'll take that for what it's worth for gold. He says, and I think you can probably multiply that with silver, I feel, which would mean triple-digit silver easy. But now, I don't know that I necessarily agree with that, but we'll see how that plays out through the course of time. And we expect gold's bull run, according to Joni Teves, to continue over the coming months or quarters, driven by rising investor positions and a continued broadening in gold's investors' base. With the Fed easing cycle underway, dollar weakness and declining real rates should be bullish for gold's price. Teves noted the UBS expected the rally to taper off towards the end of 2026 in anticipation of the end of the Fed's easing cycle and improving economic conditions. That said, given the structural shift in gold's role to becoming a core part of the strategic asset allocations, we expect the correction to ultimately be continued and for prices to stabilize at historically higher levels in the long run. And the same could be same for silver, stabilized to higher levels in the long run, which is why I said at the beginning of the video, I always look as far as holding these metals beyond just the short-term price gains in the bull market. What will it be on the other side of that bull run? I don't know, but likely it's going to be much higher than where it was before that bull run. Even when adjusted for inflation, I think it's going to outperform that. And that's a pretty bold statement coming from somebody like me, who I consider myself about as the most realist as I can conceive of. I like to be real about the metals. There's more to them than just their price. But I like to be realistic about the price proposition, and we look through a course of time, through the last 100 years, and even through the last 50 years. If you play your cards right and dollar cost average accordingly, you will preserve your wealth. And I think the same definitely can be said for gold, and you don't have to be even that great of a card player for gold. But with silver, you got to be a little bit more strategic. However, if you've started stacking this year, well, you can just keep buying and you're doing good. You've seen pretty much nothing but this bull run with silver. And silver especially is a metal that I think has two things going for it. Right now, it's got one, it is following in gold's footsteps as a precious metal, as a hedge against economic instability and the madness that we're seeing around the world today. But number two is even more important. It has a dual role as an industrial metal. And really, there's so many uses for silver, over 10,000 of them, that there is an aspect of the silver market that, with those uses in science and technology, and other aspects that really even recessions can't stop it. At least they can maybe slow it down slightly, but only for a short amount of time. In other words, we may see a crash, a flash crash in silver's price if there's a massive economic shock, but it's going to recover, I think, even quicker than what it's seen before. To some extent, we're seeing some of that play out now. And with some of these more recent pullbacks, even sharp pullbacks, are recover very, very quickly and move on. And here we are now, sitting well above $47 an ounce. Man, it is literally within spitting distance of $50 right now. And I think that most everybody agrees we're going to get there soon. So there it is. Now let me know what your thoughts are about today's market report, and make sure to check out the video I posted this morning about another metal that I think is in even greater position to potentially move up and a bull run with it. So with that being said, I'd like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.